Stock tip. Best stock setups.
Hi, I'm Marcel Dodia, and this is a new episode of Stock Tip Daily Update. Today, I am going to disappoint some people by saying that I think this is it for the rally. If you take a careful look at the markets, you will see that the discrepancy in the markets are growing. By that, I will mean that even though the SPY is now 4 days up and has reached the last support line, the last trend line here, and the Qs have pushed above and managed to close above it. They are still lagging below the 50 moving average, but this is not the main thing to watch. The main thing to pay attention to is the IVM, the Russells. So after today's movement in the Russells, I am beginning to worry that this won't be much of a rally, but only a mere correction. And that's what you see here. So if you take a careful look at the SPY, we are nearing we are above the last support lines here, and we are heading directly for the all-time high. And at the same time, the Russell, so most stocks, so to say, are still at a very low place, still a disastrous place. They haven't even conquered the last support line here, and they're still beneath this last pretty much vertical trend line, and today they haven't closed any better. The only good thing is that we are still above the 9-day moving average. But take a closer look, the 9-day moving average is the lowest one, so pretty much the worst you can have in a descending trend. Also, if you take a wider look here, this is anything but good trend. So if I know one thing, then that would be that the more discrepancies and the more pronounced the discrepancies are, the less possible it is to have a sustained rally. To have a sustained rally, we need all the three main indexes to go in the same direction, and those are the S&P 500 here in my chart with SPY, the Nasdaq with QS, and the Russell 2000 with IVM. And that's a little disconcerting. That's why I would recommend that you maintain a pretty high cash quota and try to cash in on your profits if you did go long. If you didn't, then you're pretty much safe. Also, even if the rally is still going further, I would not advise opening any more longs, as we are 4 days long, and not only that, but we are pretty much from the lowest point here. We are pretty much 8.5% up in just a couple of days, and since this last support line here, we are 7% up, and that's 7% in 4 days. So we've learned that a while ago. If you are going too vertical, then that would mean a pullback, and a pullback would mean a continuation of this correction, say the least. And that's it for the SPY, the Nasdaq, and the Russell. The German markets are also still limping behind, and they do seem to be more realistic not um, in not showing any signs of a rally. They've simply completed a bounce to this line, and perhaps that's all. Also, the day was pretty much negative. We've ended pretty much on the same day, on the same level as yesterday, with a big difference though. Namely, yesterday we had a nice hammer, and today we have a negative candle. So that would be the difference. Also, euro to US dollar has reached the 50 moving average here. The last times we reached them, not just the last time. So if you take a look at this trend canal here, the moves are as follows. So we bounce back down, a vertical move up, and a bounce back down out of the 50 moving average, followed by another bounce up. We touch the trend canal, then a bounce down, and by the next touch of the 50-day average, we're going down. Then another one to the trend canal line, then down, and to the 50-day moving average. So I'm hoping we are going to bounce back again. Otherwise, I'm still going to wait a little and to see if we are going to break out of this trend canal. I don't think so. That's why I still have my hedge, but it wouldn't be the first time I'm wrong. Yeah, we'll just wait and see what happens. Meanwhile, this hedge of mine is nearing its zero position about here, and since this low point, I think I've lost through this hedge perhaps 2% of my portfolio, but I'm still remaining optimistic because if you take a look at the larger picture here, I think the next pullback, or perhaps this was a pullback, that I think the trend is going to continue down. Oil also with nothing for a day. If you get what I mean, so this was pretty much nothing. We started and we've ended the day pretty much at the same point, although the volume was pretty huge. We are still below the resistance line here, so I suppose we are still going to be moving inside the trend canal. I'm still waiting to see if you're going to touch the resistance line. If you're going to touch it and then turn back again, then perhaps I will open a short on this ETF. But only if we get a nice, at least a small outside reversal, so a convincing setup. Without a setup, I'm not going to touch this title. Then gold and silver remain distant from any form of a setup, so you can't start anything with them at the moment. Not that I would, and that's it for the markets. Now, my positions, I had the SPY, I had a small position in the SPY, a small position in the Qs. Yesterday I've taken some profits here, so this is where I opened my position here. Here's where I opened my position, and it was my initial stop. Because we opened today with a gap up, I placed my stop just beneath the lowest point of the gap, and it got closed. And I always do that. I don't wonder why I did that. I always do that. If we have a gap up, then I would really like to see it defended. If we attack the gap, then I'm pretty much out. I don't want to risk any of my profits, especially in such a market where we are already 4 days up, and we are just beneath or just above all of the major support lines and trend lines. So that's not something I'm interested in, to gamble with my profit. So that's why I've taken my, so yesterday I've already taken my profits, and today I've pulled my stop from where it was yesterday here to just beneath the gap, and it did get closed. It's no problem. That's something I took in account, and I'm still not angry at it, not the very least. And in this how trading is, it was still a very nice profit. I think 0.5% or so, and the Qs also brought in some cheese. But here the same story. My trade also got stopped, and the day pretty much ended where it started, with a small hammer, but not that much convincing volume. So the same story here. This is where we opened our trade here. This is where the initial stop was. So we still made about 3 times our initial risk. So now I'm pretty happy with that. I don't need anything more. Another point of discussion today is MGI. MGI delivered today, so I've talked about this in our premium section yesterday. This was a premium setup from yesterday, and it pretty much delivered. So by premium setup, I mean a setup from the last part of our video, a setup for the subscribers of stock-tip.com, and today it was bombastic, so 9% up, more than you could hope for. And just take a look at this risk. If you've taken the risk the today's low here, then you are perhaps nine times your initial risk up. So I presume you've already taken your profits. I decided against opening any new positions today, and I've said it before why. I explained before why, but one thing I would like to show you is DVEC. So DVEC is another position of my portfolio that I've opened here, and in total it was yesterday 23% up the last 2 days. Today it consolidated, so we have here a mother bar, an inside candle. I hope you see another inside candle or two, and the 9-day moving average is still pointing up, and that we're going to bounce up or to continue our trend here. Most importantly, I hope we reach our target here, 170, 175. That's what I'm aiming for, and I'm still not willing to risk too much money. I've already taken some profits yesterday, so this was the point where I got into the trade. So this line here, the initial stop was here, and I think this is where I went, or no, here I think is where I went into the trade, and we are way up right now. I think my actual stop is now here, but I will pull it here. I will leave it some room because of this widespread here. So this during the day this was a widespread of 30-40 cents, so I'm going to give it a little more room than usual, but overall I still hope this title is going to perform. So even though I don't have any positions anymore on the indexes, I still have 1 or 2 positions, actually 4 positions that still perform pretty well. And if the rally is going to continue, I'm hoping to cash in on it through these positions, and I think that's enough. I don't need any new positions at the moment. If the rally is going to end and the markets are going to turn around, then my stops are pretty tight here, so not that much of a risk. I'm pretty much not risking anything at the moment. The rest of the portfolio is already known to you. IRTC also consolidated today. It's not something I'm happy with, because the last movements were pretty aggressive here, an aggressive move here, an aggressive move here, an aggressive move here, an aggressive move here, and now we are limping. We are limping, and that's not something I like. We don't have any real setup here. We're just hovering above this very old support line. So it's not really a support line anymore. If you think about it, we are hovering about it, and we are not doing anything. Not much volume, very low volume. If this trade gets closed, I won't be that upset. I think my stop is also here. So not a huge risk for a small position, but a little more than I'm willing to pay here. MDRX also with a neutral day here, we are starting to get squeezed here. So I guess it depends on what's going to happen tomorrow. Are we going to open with a gap up or a gap down? If you open with a gap down, then that's pretty much it for our position. Then I will close it down immediately or after the first 5 minutes. If you open with a gap up, then the sky is the limit here. So we shall just have to wait and see. And HP is starting to deliver. HP has had a nice 4th day, so 4 day in a row. The last time around we had 1, 2, 3, 4, 5, 6. Here a little more, or many more. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Here again and here again. So we may just still have a little room for waiting, and it looks pretty well. I think this is where we are able to take our first profits, if we are going to be able to take our first profits, if we get them. Okay, now to the third part of our videos, the setups. You